Thursday, February 29th, the last trading business day of February. Market analysis, Stan Ehrlich, and currently about 10:06 California time, a little past the middle of the traditional trading day, 6:30 to 1 o'clock California time. Now, I start out with the stock market indexes, you know that. And then I go to the futures markets. And we've got some brand new stuff today, by the way, and a couple of trades or more that are doing pretty good. We'll get to that in a moment. E-mini. Currently trading just a little higher, about 10 and a half. But it has an outside trading range day, bullish engulfing ER candlestick. I'm sorry, just a bullish engulfing candlestick. And that does imply that if it stays higher on the day, higher than the previous close, that we're going to go up some more. But we have established in the last several days, 6 now, the inability for the market to stay above what basically is today's high. It stopped again at almost the exact same prices. We'll take a look at some detail in a moment. So I think, as I've been saying, that we are still going to have a correction. Now, I'm not bearish. This is a short term, maybe a week or two, hair more possibly, correction, and very possibly back down to this trading range, which starts for the support at 48.40-ish, down to about 47.50. Anywhere in that area, I expect the market will be getting oversold and start to show reasons to go long for the continuation of the long-term bull market, and probably new highs in March, April for the whole trend. March being tomorrow. But, you know, I'm at the second, third, fourth week in March, or maybe April. So I've got no signal. The damn thing is still holding up here. It really isn't starting to break down much. Yes, I've got new lows for the day, and here we go. Since the high day, this is a 5-minute chart on the E-mini. We hit the highs, pulled back to a little support that was building, held still in general, came up to a little resistance that was building, and then finally broke below the minor 1 or 2 day support area. Found support again, now rallying to the minor short-term resistance, back and forth, inside the day, the last couple of 3 days. Today, this morning, there was some good fundamental news, which drove the market sharply higher very quickly. Nothing huge, but look, it came right up to that resistance area that it had built before, only a few days ago, stopped cold turkey, and came all the way back down to where it basically started before the report came out, and we've bounced. Now below most resistance, above one basic layer of support that only really good for the last couple of days, 2.5. I still think this market's going to be coming down some more to the support area I just mentioned a moment ago, modestly lower. Next chart is the NASDAQ daily data chart. Now, you know I had a sell signal on February 16th. The trade with the appropriate kickers, that means the trailing stop speed, did very well. And we got stopped out just as the market was starting to rally back up again in the last half hour on February 21st. Good trade. I expected more out of it, but green is green. Profitable trade is a profitable trade. Next, the rally came right up to, and it actually did make minor new highs, but that was only a few days ago. So it stopped, pulled back down, and we're having a lot of trouble here in this resistance area. Now today, at the moment, we have a bullish engulfing, again implying that it's going to shove its way through the resistance and make new highs for the trend again. I have some big question marks about that because of the resistance that is found and stopping at so far today. So I got to wait for a new signal. wait for a little more evidence that we're going to see this thing drop down. The biggest one, of course, is to close below 17,371. That would have built past tense a rather nice, and it actually would be a little more bearish number of days trading range that we would be closing below approximately, it looks like a full month's worth. But that hasn't happened yet. I'm not getting my dip. It's not really starting. Holding on, watching to see what happens next. March, NASDAQ, 5-minute chart. There's the sharp rally to resistance this morning, pulled back, and then we're in another rally again at the moment. Awfully strong market, does not seem to want to cooperate on the downside breaks. When it does, it doesn't like it and goes right back up to the highs, if not makes new highs. And that's the last couple of months. Next chart, bonds. You know I'm long-term bullish. I do think this is going to make some minor new lows. Not a lot. Not quite sure where it's going to stop on the downside dips here, but maybe a point or two, three, stretch it in the next few weeks. But again, like the stock market indexes, I'm not seeing it. This thing is holding in here at a sideways trading range, maybe building a bottom. I cannot decide. I do have a bullish engulfing today. It's not a buy signal because I wasn't oversold within the past few days. Then I would have a green ER buy signal today, but I don't. I think we're on the verge of either proving me wrong about the dip and starting to make new highs and going to have some decent upside follow through if that's true. Or I'm going to be right about this, still making a little bit of new lows on probably some slightly disappointing fundamental or fundamental news, but it remains to be seen. Next chart is 10-year notes. Same commentary, no real change of opinion, just slightly different price levels. Next, we're bumping up against major resistance in the crude oil. And I've added a new contract. One of my subscribers asked if I would put, I think it was heating oil back in again. I have. Crude oil, resistance. Not overbought, but resistance is a reasonably good reason to expect the market to pull back down some, which is exactly what I think is about to happen. Today is a doji inside day. The highs are no new high for the trend like yesterday, but it didn't stay there. That's not really a good sign when you pop your head above water like a periscope, look around and goes, oops, and you pull right back down again. That sometimes, actually a little more than sometimes, leads to a little bit more weakness and something more serious than that occasionally. So what have I got today? Nothing. Sideways, can't make a new high, can't make a lower low than yesterday. Let's see what happens. I do think resistance is going to cause some sort of minor downside break. Heating oil. It is making new lows. It did make new lows, but right now we're back up to, and at least in the middle of yesterday's range, and at almost the high of today. So the new lows don't have any follow through. A weak market that wants to go down some more would probably be sticking around the low of the day now and showing not this much bouncing strength. It's not that much. It's not a big deal. I don't have a reversal. I got nothing. I got no overbought and oversold. I do think it's going to dribble around sideways to a little lower. Next, natural gas did have a buy signal 2 days ago. We were oversold within the allotted number of days. Exactly. So this is a legitimate signal on February 27th in the natural gas continuation. Well, it's the April being plotted now. And it is making a little money. ER1 overnight is still long. You can see the little green line. We have made a higher high today. It's only been 2 days after we bought it. Not very long. It's ER1 overnight that is holding a trade. ER3 is trying to get long, and we just missed hitting our bid yesterday by a very small amount. but a miss is a miss. Our trailing stop at the moment has been able to come up so quickly that it's protecting a profit now on our ER1 overnight, which is doing just fine. Not great. Hey, but green is green. And next, unleaded gas. Now, I'm uncomfortable with the angle of this hypothetical maybe neckline. This neckline is more likely on an angle like this, but it's not. I can't change my mind. I do think this is a very reasonable head and shoulder top forming. Timing is good. First shoulder, I got a bearish signal, did okay. Next rally high was a higher high, and the downside swing after that was not quite as low as I would have expected normally. Probably down into this area here, flattening out, but still upward slanted. The neckline not so damn steep like we've got it right now. But let's assume this is going to work. We did have a bearish engulfing yesterday, not an ER sell signal, unfortunately, but close. And we're down a little bit this morning. So if this is true, the neckline is right here, pretty close. And if it closes below that neckline, it's supposed to go down all the way to here, like I started talking about yesterday. And at least I put the measurement in today, 2.2848 would be pretty accurately the minimum downside objective. Again, if the pattern's legitimate. So far, so good. Any rally is going to, that's too big or for too long, is going to ruin the pattern. If it goes lower relatively quickly without going sideways or rallying much, that's going to be good for the pattern, and we'll see how it evolves. Next, gold, silver, platinum, and copper. Gold and silver last year was just incredible for me, but we're not getting any signals so far the first couple of months of this year. Now, I know that one was apparently on January 2nd. Yeah, just barely this year. But I kind of included in all the signals that we got that were really great last year. So we're waiting for a signal. We're between a rock and a hard spot, resistance above, support below, and I'm just going to wait. Silver, already down to the support area, and the bigger picture, as you can see here, that's a pretty good support area. And expanding this a little bit, no reversal today, not even close to overbought or oversold, very, very neutral at 48. Rock and a hard spot, we're sitting on the whichever, the support one, and I think this can rally a little bit. I ain't getting anything right now. It's up on the day some. I need to clear above 2375 in order to start talking about 25.13 and maybe back up all the way to the resistance of 26.5-ish. But again, I don't have any signals. I just got stability in a support area. So I don't have any real evidence that the support is going to start pushing it up. I think so. It ain't doing it yet. We're just a little bit higher at the moment. Next chart is platinum. It also has some reasons to believe it could start to rally, which it's not doing. Platinum is actually down slightly at the moment, but a large support area has proven to be effective since last October, and we'll have to wait to see how this pans out. Now, any close under 272.90, I'm sorry, 872.90 is going to be bearish. We will first see if the last important low in November is going to hold. And if that doesn't hold, well, then you've got significantly lower levels to come down to. Yeah, that would be pretty bearish. So waiting for a signal in platinum. Next, high-grade copper. Also, I have to say, between that rock and a hard spot, the rally up to resistance got close this time, and we've pulled back. We're kind of in the middle of the range between resistance and support. So, hey, shut up if you don't know what to say. And that rhymed. Next, soybeans. Well, I told you that when it started to break below this support area, it was going to be bad news for soybeans. This looks like it could rally at any time again, like 2 days ago, up to resistance. Now that we've had lower lows and still oversold, that would be very normal. A rally back to, I don't know, 1160-ish, and then lower lows after that. This is quite bearish on an intermediate to longer term basis. I mean, I think this thing can go down to 10 or even lower, 1,000 or even lower. Take some time to do it. Next, soybean oil, keep doing that, is managing to hold at support. It is trying to form a little bit of a bottom here. I wouldn't call it super successful so far. At least it's trying to bounce out of the support area. I got to see some closing prices over 46.20 in order to be a little more optimistic. Otherwise, I'm simply going to wait here. If we close above yesterday's high, we will get a bullish engulfing buy signal, but that has not happened yet. I got oversold. I got support. I got a lower low than yesterday's low. All I need now is to get above yesterday's high. I'm in. Next, meal. It is doing exactly what I just described in oil. Meal has support it's bouncing out of. It did get below yesterday's low. It has now rallied above yesterday's high, therefore turning my price bars, candlestick or vertical bar chart, doesn't matter, green. This is an ER official new long buy signal happening in soybean meal now, today. RSI has turned green, so has the price bar turned green. All the criteria have been met. Will it work? Question mark. Stay tuned. Next, meal. 1 minute chart. Details. We're now long from about 8:05 California time this morning. Small loss at the moment. Trailing stop has already started to jump up and is now still below our entry price, but the risk factor appears to be around $2, between 2 and 3. Not bad for the ER1 overnight version, and also for the ER1 scalp version, which we are not stopped out of yet. That's the $2 risk. That's the STS right here for the stop for the ER1 scalp. But this line down here is for the ER1 longer term position trade, which I will probably cause to go higher after the close to see how we have acted, or make it go up if we start to really break down badly. And that'll mean I get stopped out of my scalp first. And that's a clue that I probably should be looking at my overnight stop and probably change the kicker to something a little smaller, which will start to move it up faster. Not quite as fast as this one, though. That's the scalp stop. Remember, you only have 1 day. You're behind the clock here. You have to get out by the close on scalps. Next chart, we did get long corn 3 days ago. It has been, so far, the lowest low for this trend. This could turn out to be a really powerful long-term bull signal. I don't know. All I can say is we bought the bottom day. That's what the ER signals are built for. And frequently, they're not the lowest low. For instance, this one here didn't work, but I got a buy signal during the bottoming out process. But frequently, they are the highest high or the lowest low. And that's why I built the strategy the way it's built, to pick those tops and bottoms that people say is impossible. It's not. I wish my more of these green and red bars were the exact highest high and lowest low, like in silver and gold last year. But it's a little hard to do. So far, so good. Next, we got the 1 minute chart on the corn. You can see we got in 3 days ago near the close. So the ER1 scalp didn't have any time really to build a profit, and it was a small loss in the close, very small. But the overnight version, we're still hanging on to, and we're still holding on to a minor profit. It's not a lot. We're trading 426. We're in at about 4 cents. No big deal. Next, wheat. And we bought the wheat. Now, all of a sudden, look at this. We got major signals, and they're working fairly well in some of these grains. That is interesting. Wheat is even more profoundly interesting because look at this last low here, and I'm going to show you why that's super important. At November 27th, it bottomed out, give or take a tick or two, at 554, 554. When we came down to almost the exact same price, looks like a penny or less than a penny lower than that, and that was on February 20th, it bounced. Not only that, it was oversold, and it developed a bullish engulfing ER buy signal, so we got long, period. And that was on February 20th. Now, we're still holding the trade, and ER3, catch this, got long on the exact tick low on my calculated entry price for ER3, which happened to be 568. And that was the exact tick low at 568 on February 23rd. That's exact. We bought the low of the day to the tick. That's the ER3 scalp entry and position entry, which we are still holding. These two green lines mean the one overnight is still on the books, and they're trading right there. The other green line means the ER3, which was a perfect entry, is still on the books. If we start to get some more strength, we'll be long 1 overnight and 3 overnight. The one scalp did make some very good money. I can see the little green dotted line inside the price range on February 20th. I'm not sure. I think the scalp for ER3 lost a few pennies or less than that. It didn't have enough time by the end of the day to develop a good trade. Probably would have, but not enough time. Okay, we're looking at the 1 minute for the same exact trades. There's the scalp on one. Took it about 15 minutes, it looks like. I'm sorry. This is a 10-minute chart because I wanted to be able to show you all of the trade over the last few days. So entry, that was maybe an hour. Out on the close, ER1 scalp, green line, did good. The overnight one got in the same price, held 2.5 days or so, did great. Come and gone, ER1 scalping overnight, we're out. The 3 is trying to get in for the first day after the signal, no fill. Trying to get in 2 days after the signal, no fill. 3 days after the signal, it came down to the exact trigger price. Again, 568 to the tick, but it was very close to the close. Therefore, the scalp only had a few minutes, looks like maybe 30, in order to make a little bit of money, which it did, very small amount. Yeah, there's the line starting right there, and it went up to there. No big deal. Can't even get a Starbucks coffee with that. But anyway, the ER3 overnight position is doing fine and is trading right there right now, and that's the equity or trade line at 575 current tick, and we're in at 568. Okay, next chart. We're looking at cattle. Long-term trade in this particular situation, the stop has moved very, very slowly, a large kicker number, and I've done that on purpose to show you that this can be used for longer-term trades. And in fact, with a slow stop, you could be an investor and have this stop still protect some, not a big amount of profit, even though this has made a lot of money at the current quote. It could go a lot higher. But guess what? We've gotten it between a rock and a hard spot. Here's my short-term opinion, and that's doing exactly what I thought. Resistance has stopped it, started to break down yesterday, and we do have a little bit bigger breakdown today, making lower lows. In fact, it came very, very close to stopping us out of this trade. The one that I've got this trailing stop, just put the handles on it. So we may be about to take a profit on this long-term trade. If I wanted to stay with the trade longer, I'd have to lower the stop, and you could do that if you wanted, but I don't recommend it. We're after money here, not being a hero. Next, hogs. False signal yesterday, had a little bit of reversal for a little while during the day, but when it closed, the signal was canceled because it didn't close in the proper position above or below the previous day's close. So that generated a small day trade loss. And today we're going up a little bit more. I think we're going to slip some more. No strong opinion on hogs, but I'm slightly bearish. Next, we got OJ. We sold the high of the rally on the first shoulder. We sold the high of the rally to the exact day in both cases. And now, so far, the historic high day on OJ did form a head and shoulder top. I talked about it in great detail starting a day or two before the last shoulder high. So if you go back and listen to December 8th or December 11th, you'll hear me squawk about it going just a little higher, which it didn't do, and maybe lasting one more day, which it didn't do. Instead, the last shoulder was that day right there. Came down to the neckline, bounced a little, and kaboom. Got to its objective. Great. I talked about this objective 3 weeks, 2 weeks in advance. The market went all the way back up to resistance again, where it topped out before, has another bearish engulfing, and oh my God, it just dropped like a rock for a couple of days. So OJ has been extremely good to us since October. Next chart. I should go back. OJ looks like it's going to go down some more. I'm bearish. I think there's a decent chance it could challenge these lows. Remember, this stuff is extremely high historically, and the chart is telling me that they may have found a cure for that. I think it's called green tree disease that was affecting the oranges and causing lots of production problems. Okay, so it's got a long way to go down maybe, and so does cocoa for that matter. And all it's doing is getting parabolic here and a blow off top and coming back. I really can't get real bearish long term yet, but this could develop into something like that. Now, that bearish sell signal was legitimate. It didn't work. So we're out within hours or a day after, depending upon the trade. So it lost a little money, but we didn't stick around to get crushed. I'm waiting for another signal. Next, coffee. Between a rock and a hard spot. Neutral to slightly bearish. Next, sugar. Big down day today. Going to test support again, it looks like. Got to be neutral to slightly bearish at the moment with some very bearish long-term overtones, so to speak, whatever that means. And it's because the market got up in a new high ground in September, stayed there, but it had a lot of trouble all the way through November and finally gave up the ghost and dropped terribly big, huge move down to 19 and a half. And that's from 26, actually 27. That broke lows going way back for 3/4 of a year or so. Now the rally has failed, and we're starting to see previous lows get challenged on a short-term basis. So the long-term picture is looking slowly but surely more and more bearish. Next, cotton the rag, blow off top, starting to come down today. Will it hold its support on the decline? Very possibly. So I'm expecting 93 and a half on this dip. Let's see what happens when it gets there. Next, back to the S&P 500. You guys have a great day. Profitable trading to you. Bye-bye.